Hey friends, welcome to one more Chemical Analyser Series episode with me. In this series, we are going to talk about the entire specialty chemical space and what is the business potential of each of these companies. Today, in this video, we are going to talk about the amines industry and in particular about Balaji Amines. We have seen that the stock has gone up 10x in the last 4 or 5 years, and from the top, the stock has also corrected by 50%. So many retail investors are confused about what is going on. So today in this video, we're going to talk about the aliphatics amines industry. We're going to talk about in particular about Balaji Amines. Then we will stress on the management quality of the company. After that, we will talk about the capex and the current results that the company has given. And in the end, we will talk about the valuation and a key conclusion that you need to take away from this video. Before we start, please hit the like button on this video and subscribe to my channel so that I can share even deeper insights with all of you. Let's first talk about what does Balaji Amines really do. Balaji Amines is a manufacturer of aliphatic amines and their derivatives. It also produces few specialty chemicals. It is a downstream and an upstream company where it is vertically integrated company, and it has developed its own indigenous technology to manufacture amines. It is located, the manufacturing facilities are located in Solapur, and it also owns a hotel named Balaji Sarovar, which is a 5-star hotel. The next question that you can ask is, what are amines? Amines are basically compounds of ammonia and methanol. Ammonia basically NH2 and NH3, and methanol, which is a carbon and hydrogen compound. When both of these compounds are reacted with each other, you get methylamines and ethylamines. On top of this, various alcohols, i.e. the carbon and hydrogen compounds, when they react, they give higher aliphatic amines and amines derivatives, which are then used in the pharma, agrochem and as other clearing agents. Then let's talk about which are the companies that operate within this industry. There are two major companies that operate within this industry, which is Balaji Amines and Alkyl Amines. Both of them are listed on the stock exchanges, and historically Balaji Amines used to operate in methylamines, and alkyl amines used to operate in ethylamines. Now both of them have expanded into each other's capabilities. So basically there is very less difference between Balaji Amines and alkyl amines. You can look at the product portfolio. On the product portfolio, we have amines derivatives, and specialty and other chemicals. On specialty and other chemicals, the companies do make a little bit of higher margins. However, they're all commodity in nature, as we will find out later in our presentation. So all in all, who are the customers for Balaji Amines? The major revenue comes from agrochemicals and the pharma business, as I have already explained, and key customers such as Sun Pharma, Natco, Piramal Pharma and Lupin are key customers of Balaji Amines. So what is the business dynamics of the amines industry? Amines industry are a very special kind of industry where the input cost material, which is methanol and ammonia, they are very volatile and determined by the international markets, and the output cost is also determined by the international markets, and companies have no control over the input and the output of entire process. You can already see on the screen, Balaji Amines management has clearly said that they can bargain the raw material. However, the finished cost prices is not in their control, and therefore the competitor decides it. So this is the first exhibit where we can say that the entire amines industry is a very commodity type industry with no special moat. As you can again see on the screen, products like acetonitrile exhibit extreme volatility, and they move from a price of 100 to 200 rupees a kg over a period of 2 to 3 years. So very difficult to determine how the prices will go up or go down. As you can see on the screen, the management has been very candid in their admission that the whole business is very commodity in nature, and the margins will oscillate between 10 to 24%. So all in all, a key takeaway from this is the entire amines industry is very commodity in nature. Margins will fluctuate between 10 to 24%, 10% being the lower band and 24% being the higher band, and companies have no control over the selling price of end products. Now let's talk about the management of Balaji Amines. Balaji Amines has been founded in Solapur, and the Reddy's continue to run the business. It is a family-run business where D. Ram Reddy, who has been leading the business for the last 35 years, has been very successful in running the business. You can already see project execution capabilities have been superb. Over the last 10 to 15 years, Balaji Amines has undertaken capex every 2 to 3 years, and each of those capex they have met certain delays, however have been executed, and the company is reaping major benefits out of it. Currently they have inducted a subsidiary called Balaji Speciality Chemicals, and where they are expanding for acetonitrile, DMF and methylamines. So all in all, we have seen from the history of Balaji Amines that over the last 10 years, the project execution capabilities have been very strong, and you can already see on the screen the proposed capex that the company is really taking. So that's the positive of the management. Let's now talk about the negatives of the management. Diversification. I don't call it diversification, I call it diversification. Why? Because back in 2011, 12, 13, the company started to build a hotel, a five-star hotel in Solapur, and the company till today has not been able to make any good revenues out of it. It's a diversification into a completely unrelated business using the money from the listed company, which is a key negative. The depreciation and the amortization cost the company way too much, and there is no useful benefit out of it. So the hotel business, venturing into the hotel business was a key diversification decision that the management had taken. And the second very bad decision that the management had taken was in 2014 and 15, when the new government came in, there was a euphoria on the CFL lighting business, and the management decided to venture into that. As the management realized that they were not able to make money in 2016 and 2017, they tried to close down the business. The CFL business was undertaken under Balaji Green Tech, and on that business, 67% was held by the listed company Balaji Amines, and 34% was listed by the promoters. So what really happened, as the company started to make losses and the business was unsustainable, the promoters forced Balaji Amines to take over this business, and their share of loss was also borne by the company Balaji Amines. So a key negative, two major issues with the management where they have taken diversification decisions. One, the hotel business, and one, the second, the CFL business. Now again today they have taken a third decision which is negative for the shareholders, and that decision is Balaji Speciality Chemicals. If you see the shareholding of Balaji Speciality Chemicals, we find that 55% of it is held by Balaji Amines, and 45% is held by promoters themselves. So the promoters don't want to give away a lot of stake in Balaji Speciality Chemicals to the minority shareholders, and want to take the benefit of the upside in Balaji Speciality Chemicals. So again, a very poor decision in minority shareholder interest of splitting the shareholding of Balaji Speciality Chemicals with promoters and Balaji Amines. So let's talk about how the results are panning out right now for Balaji Amines. As you can already see on the screen, as COVID-19 hit the entire world, the pharmaceutical industry began to saw extraordinary demand. And because of this, Balaji Amines was a key beneficiary of this demand. As China continued to remain under severe lockdown, demand shifted from China into India, and margins for Balaji Amines expanded from about 20 to 22% to 28 to 30%. So this was a supernormal phase, and this phase will not continue forever. As we have seen, now the pharmaceutical industry continues to face a severe demand issue, and destocking phase is going on within the pharmaceutical space. As we can see on the screen, the volumes for Balaji Amines have degrown in the last 9 months. On a consolidated basis, the volumes are just up 3%. So all in all, what has really happened? The revenues have grown from about 1000 crores to about 2000 crores. The margins have grown from about 15 to 20% to about 28 to 29% as the COVID-19 pandemic hit from 2020 to 2022. Now, as margins and revenue start to normalize, the margins will settle somewhere between 20 to 25%, and the revenue growth will slow down as China comes back online and the pharmaceutical industry demand continues to slow down. And the stock is reacting on the basis of this. We have seen that the stock had risen from about 1000 rupees to about 4000 rupees, and from 4000 rupees, as the margin started to normalize, has now started to fall back down to 2000 rupees. So let's talk about the future capex that Balaji Amines is undertaking. As you can see on the screen, Balaji Amines is taking a capex of about 400 crores to 500 crores in the next 1 or 2 years. A key part of the capex will come in the Balaji Speciality Chemicals company, where they are putting up a methylamine plant, butylamine plant, acetonitrile plant, DMF plant, and dimethylamine hydrochloride. These are four or five areas where Balaji Amines is really expanding. And on the acetonitrile side, they have come up with a good technology where they will be immune to input cost pressures that they are already facing right now. So all in all, a capex of about 400 to 500 crores, where over the next 1.5 2 years, the revenues will grow from 2000 crores to about 4500 crores. Let's talk about the valuation of the company. As you can already see on the screen, Balaji Amines trade at about 20 times PE multiple, and Alkyl Amines trades at about 56 times PE multiple. Such a huge gap between the valuation multiple of both of these companies, where both of these companies operate in the same amines industry. A key answer to this is the management quality difference between both of these companies. As I have already explained to you that Balaji Amines has taken some questionable decisions which are not in the interest of minority shareholders. So all in all, there is a huge difference between the valuation of Alkyl Amines and Balaji Amines. Amines being a commodity type industry, the valuation of alkyl amines is extremely expensive, and you should be very careful there. On Balaji Amines, the valuation is not that expensive. However, we cannot ignore the management wrongdoings over the last 10 years. So let's now talk about the key risks that the entire amines industry, and in particular Balaji Amines, really faces. Point number one, the entire amines industry is a very commodity type industry. Uh, Players don't have control over input and output costs, and sometimes the margins will fluctuate in a wide range from about 20% to 30%. So one of the key risks is the volatility in margins. Point number two is, as China continues to open up, there could be a possibility that China comes back and dumps a lot of raw material into the Indian markets. That is another risk that the company really faces. And point number three, over dependence on the pharma industry, especially the API space and the generic space, where 56% of their revenues comes from the pharma space. Any slowdown in the pharma industry will be a key negative for Balaji Amines and Alkyl Amines. Point number four, especially for Balaji Amines, is that the management takes diversification decisions which are sometimes not in the interest of minority shareholders, and that hurts the valuation of the company. So what is the key takeaway that you need to learn from this video? Point number one, the long-term trend on the amines industry continues to remain up. Within that long-term trend, all these stocks will continue to remain cyclical depending on the demand and supply conditions. Balaji Amines is a story of strong management execution, and the execution capabilities are far superior than any other listed chemical companies. The company is undertaking massive capex over the next 2 to 3 years, and you will see the revenues expand from about 2000 crores to about 4500 crores. Margins will continue to remain cyclical in the range of 10 to 25%, and because of this cyclicality in margins, valuations will also continue to remain cyclical. So a key takeaway is you have to not take exposure to any of the amines companies where valuations continue to remain extremely high. When the valuation come down, that's the time to take key exposure to all of these companies. These companies will continue to remain brilliant wealth creators over the period of next 5, 7, 10 years.